This morning, State Farm wants an emergency 22% rate hike because of our recent wildfires. The company says it's put them in a dire financial situation. State Farm says they've received nearly 9,000 claims so far and have shelled out more than $1 billion. Joining me now is insurance expert Karl Susman of Susman Insurance. And thank you so much for always coming on here and putting things into perspective. Now, this is on top of a 30% rate hike that they've already requested. So we're talking about potentially 52%.
Right. About 6 months ago, State Farm put in an emergency request for rate relief, which means it's supposed to be fast-tracked. 6 months later, nothing's happened with it, and we're waiting. Now the wildfires happen, and State Farm is being hit very hard. They are getting a disproportionate number of claims from the wildfire just based on their general underwriting practices. They tend to take more risk in larger homes in those areas. So now they've put in a request for an additional rate increase that would impact homeowners, renters, condominium owners, and landlord owners.
And so what does that mean for those of us who have these insurance policies? Does that mean all of us are going to see our rates go up 50-something% if approved?
Well, first, the Department of Insurance has to approve this, and they're very consumer friendly. They're not going to let anything through unless they're sure that it's necessary. And these are averages. So when you see 30%, for example, that doesn't mean your premium is going to go up 30%. It means that overall across the entire state, that particular line of business for homeowners is going to go up 30%. Some will go down a little bit, some will go up a little more than that. It's an average.
But this would not affect people in certain zip codes. Explain that.
Well, everyone would be impacted by the price change, but certain zip codes have protection from being non-renewed. The Department of Insurance put out a bulletin that said if you're in a fire area, then you are not able to be non-renewed for 1 year. If you're in an adjacent area, also you have protection for 1 year. If your home was actually damaged in the fire, then you have protection for 2 years. And you can go to their website at insurance.ca.gov, put in your address, and it will tell you what you're eligible for.
Now, I go out and I talk to people all the time, paying thousands, sometimes tens of thousands of dollars to insure their home. A rate hike like this, again, if approved, on top of it, some people are going to say, I can't afford this. So what do they do?
Well, most of those policies that are very expensive like that are not with companies that you or I would be familiar with by name. They're with other companies that are outside of California because the primary companies in California have not been offering new policies. The hope is that now we have the new regulations in place, so the primary companies will start offering coverage again, and it'll be less expensive than some of those non-admitted carriers.
Now, there are some consumer groups who are pushing back at this. Consumer Watchdog put out a statement that reads in part, if State Farm needs money, the parent company should step in with this $130 billion surplus, not California homeowners, some of whose homes are in ashes. I mean, look, if you talk to anybody, they're going to say, why is it on our backs? These insurance companies are still making money. They still have these big paychecks for the people at the top. What do you say to your clients who say that to you?
Well, the truth is that it's not one or the other. State Farm is definitely going to be bringing in money from their out of California surplus to pay these claims. They had already said 6 months ago they only had about $1 billion in surplus. So they're doing that. They're bringing money in to be sure all of these claims are covered. The rate increases have nothing to do with paying the claims today, obviously, because that money is needed right now. But what they're doing is trying to they're trying to keep themselves afloat so they can continue offering coverage in California going forward.
You've been doing this for a long time. Do you think that we're going to see other large insurers follow suit and also ask for double-digit increases?
I think we're going to see a shuffling of premium. We're going to see people that are in areas that are a higher risk paying more and people that are in lower risk areas paying less. The new guidelines that the department passed just went into effect in December of last year, the sustainable insurance strategy. It's going to give carriers the ability to really underwrite on a more case-by-case, house-by-house basis. So people will have a lot more control over what they're paying based on what they're willing to do to make their home less likely to burn.
And where they live, of course, too. Thank you so much for joining us, Karl. I appreciate it. Rutabaga, back to you.